Yes, and we are live. So welcome everybody. I'm just going to wait a few minutes until everybody joins. I have decided to use a different platform as it's easier, and of course this is pre-market analysis. I'll be going through the basically big movers today and what basically is happening in the market today. Yeah, so the thing that is dominating the market today is, of course, it is commodities and precious metals, especially. You can see here that oil is up, Brent is up, natural gas is down 1%, gold is up, silver is up, and copper, for example, is also up. And that is the same for the other metals like platinum and aluminium and so on. Especially aluminium has been absolutely exploding the last recent days, and it's getting to a point where that's growth is not sustainable. It has an RSI level of way above 80, and it is significantly outside of the Bollinger Band, and therefore it should be expected for aluminium to drop at any point. This started shorting it on Friday, but I closed it due to the fact that there is a new contract opening today. So that contract will close at 6th of June, if I remember right. Otherwise, we can see that the 10-year bonds are constantly decreasing. So that fear of the yields going higher, that is basically gone at this point. What people are most afraid of is inflation. And if you look at precious metals and raw materials and so on, they are constantly increasing, and probably due to the fact that the increased demand for as the world economy is reopening again, and that will create actually a lot of inflation at the end. And you could see in the long run interest rate increase, as central banks have to increase their rate in order to tackle that inflation, and that will affect stocks indices significantly. Otherwise, you can expect increase in oil. You can see it already happening here, as it was a cyber attack on the infrastructure in the United States. But today I'm just going to go through. I'm going to use markets platform, as it is very user friendly. This is not the platform I use on a regular basis, but for technical analysis and so on, it is fairly nice, to be very honest. Very clean, and it's easy to go through. The only minus really for this platform is that it does not have as many instruments as, for example, Etoro has and so on. But I will occasionally use my main platform, which is TC2000, and Etoro is absolutely terrible when it comes to going through many categories. You have to write everything down and so on. So that's the main reason why I don't use Etoro at this point. So I don't have any funds here or anything. This is just mainly due to going through the main action today. And they have quite a lot of interesting futures, as, for example, they have signals here, whether or not they are buying signal neutral or selling signals, or the bearish and so on, and also where these signals come from. So that is a really nice nice future to basically have. But top movers, they also have a category of basically what is basically moving the market at this point, and also primary, what people mostly look at. And top movers, for example, is Etoro. We can go and have a look at Etoro. You can see that it is trading at 4,041 at this current stage. Absolutely massive move to the upside. So I started analyzing Etoro when we were down at $200. That was way back here in probably all the way back over here. This was here in June last year. That's where I started analyzing Etoro, and you can just see where it is at this point. So yes, if I'd known that Etoro would have basically gone up this fast, I would have basically over 20x in just a year, then yes, I would have invested significantly amounts in this. However, the setup that I'm using now is I have to go through it. So this black lines, that is the Bollinger Bands. We have the lower one here and the upper one here in black. Then we have the the cloud, which I also use on a regular basis. And we have the cloud here, and then we have the 9 moving average and the 26 moving average. So the 9 moving average is the green line, and the pink line here is the 26 moving average. Then we have a red line here, which is the 50 moving average, and the blue line here, which is the 200 moving average. Then I use the MACD, I use the stochastic, and the RSI. So those are the main indicators that I use. I could add the CCI, I could also add yes, I actually missed that. I'm missing volume, so it doesn't show up here, but it will show up when we have indices and so on. But volume usually is also part of this. So if you look at Etoro, you can see that we are significantly outside of the Bollinger Band. And we are way past 80 here in the RSI. So just looking at this, where we are in price action compared to the Bollinger Band, it basically should say that we should pull back towards the middle of the Bollinger Band. And it basically at any time, it is just completely overbought at this point and overstretched, and the pullback is imminent at this case. So last time we have been outside of the Bollinger Band, we can see right here we have pulled back towards the 26 moving average several times. We have also pulled back towards the 50 moving average. Also here, when we got close to the top of the Bollinger Band, we pulled back towards the bottom of the Bollinger Band and the 50 moving average. At this point, this is not sustainable. If we just go far out here, you can just see that it is almost becoming vertical, and moves like this will not be sustainable. We can look at Fibonacci retracements also for this, and you can see that you have it right here. So we have the, no, that's completely wrong. No, never mind. Never mind. Just, that was not the right Fibonacci retracements. So, never mind. Yes, so what I expected to happen here is that we'll pull back. We'll find quite a lot of support here. The previous highs from Saturday and Sunday, and also here on Friday, that's around 3,600. That is where we'll find first support. Then we'll most likely break down towards the 20 exponential, the 26 exponential here, around the 3,055 and the 3,000 level. So we are definitely an uptrend. There is no sign of this basically changing the trend whatsoever. We're way above the cloud, and we're also far away from these two moving averages basically crossing each other. We have seen crossing in recent periods. You've seen here where it looked like we were going to break down, but it continued to rally to the upside. So idea here is not to buy here. It is really risky to buy it at this level. The idea here is to basically wait for a pullback, stabilization, and then buy the dips. That is kind of the best strategy for this. So then we're going to look at copper as well. Copper is in a similar move to the upside. It's trading at 4.8765. So I remember last time I traded copper, it was down at 4.0, and it had a really nice move. It's actually this candlestick here, and I thought that this move was definitely going to push copper towards support again, but no. There is apparently a shortage of copper, which has been in the news recently. That's probably the reason why we have 3 massive green candlesticks for copper. And that shortage, of course, will affect the supply of copper, while demand is growing because the world economy is increasing again. But copper is getting into territory where it will pull back. It will eventually pull back. So what I'm looking for here is basically a shooting star where it increases and then just pulls back, and then we'll have another red candlestick here, which looks something similar to this, just another star in between. We have an example of shooting star, not there, but so I don't know if we have it in the lower levels charts. Yes, something similar to this. So where you have price action going up, and then we rally up towards the resistance, and then pull back, and then we have another red candlestick here pulling back towards support. Something similar to this. That is basically what I'm waiting for. So at the moment, it is still rallying. It is getting significant. It's approaching nearly 90 or 87 in the 4-hour chart. So a pullback will happen at any point. If it's today, or it will not last several more days. With this, it's becoming fairly parabolical. It did last quite a bit here. Well, it fell back towards the 26 moving average, and if that is an indication, then we could drop towards 4.4, and I think it will drop further than that. I think it will drop back towards the previous highs here, so that will be 4.37 where we'll find major support, and then it will rally. So it'll probably go something like this and then continue back up. So if this continues also in the long run, it will also be, it will basically go down by itself, because there will be a point where it will no longer be productive to use, for example, copper as if it continues to rally this way. So you can just look where we were just 1 year ago. It was all the way down at 1.9, and now we're trading at 4.8. In an absolute massive rally, and if you go all the way back in time, this is basically the highest copper has been in this chart. If we can go further than that, it's probably all-time highs we are at this current stage. So just on the monthly chart, how far copper has rallied to the upside, and this growth is just not sustainable. At one point, it will tumble and turn back down, as it will no longer be too costly for use in production, and therefore demand for it will basically decline. Then we can also look at the Bitcoin Cash, which it is up 7.6% at this current stage, and this is looking like it is going to tumble. So many of the cryptocurrencies are ready to tumble at this point. You can see Dogecoin has already tumbled, and many other will basically follow as well. So if you look at technical indicators for this, we can see that we hit the highs here of 1604, and then we fell towards 1278, and then rallied yet again. But this candlestick here, where we rallied up towards 1564, and now we're trading at 1439, that is a massive drop, a massive pullback, and that is kind of a signal that we are ready to pull back. And if you look at where we have found support in the past, it has basically been down here at the 26 moving average. So yes, taking indicators, we can also see that we are significantly overbought at this point. We're above 70, and technical indicators otherwise are not turning around at this current stage. But if you look at the cryptocurrency market, we can start by looking just at this cryptocurrency market. Ethereum, Bitcoin is up only 0.15 at this current stage. So it has been struggling. So it got to its all-time highs here at the 64K, dropped all the way down to the 47K, and has recovered to 57K. The thing that is with Bitcoin is that it is the most popular cryptocurrency. So in institutional investors will probably flock to Bitcoin because it is they know it has been around for a long time. It's kind of a brand when it comes to cryptocurrencies. But for retail investors, they're probably not looking at this. They're probably looking at Dogecoin and other cryptocurrencies that have increased by 12,000% the last few months, and they're looking for the riches there. You will not see Bitcoin increase 12,000 points more. That will be impossible. Those days are long gone. You will probably double or triple, it may well be in time, but you'll not go to 10, 100 and 1,000x. So it is if you look at where we've found support in the past, we can see that this 26 moving average is right here, also down here, also down here. So that has been fairly supportive in the past. And then we have the completely sell off here, where we basically trash both the 26 down to 50, also the bottom of the bullish band, and just go way below what was expected of this, and therefore we also get this massive rally. If you look at technical indicators, they are not looking very impressive. The MACD is basically flat. The stochastic is becoming bearish, crossing the signal line indicating bearish momentum, and the RSI is technically flat at this current stage. So we're also seeing a pullback here. We did rally up towards 59K, and now we're trading at 57K, and we are having crossing of the 9 moving average and the 26 moving average right here in the cloud, and that usually is an indication that we are going to go higher. So we did have a bearish crossing here, which was a selling signal, and now we're possibly having a crossing here, which is a buying signal, but that is still be seen where we are going. If you look at the 4-hour chart, we can see that it hit the top of the bullish band and now is heading back towards the 9 moving average. We have the 26 moving average right here, so it looks like we are starting to trend upwards. At least this should be a line, or should be a support line. If we break below here, then we could go lower, but it's probably as far as this will go, and that is at the 57K. To the upside, of course, we have a long way to go, all the way up towards 64K. If that breaks, then we are basically ready to go to 65 to 70 and probably do 100K as well. So let's look at, for example, another one is a Litecoin that has been rallying significantly in recent days, but is pulling back as well at this current stage. So we have the daily chart here. So it got all the way up towards the $413 level, and now it is creating this massive shooting star here, and we could expect this to basically collapse quite far. If you look at where this has found support in the past, it has mainly been the 50 moving average, which is the red line here. You see it right there. We have nearly touched it over here as well, touched it here. Same goes for here. This was a really clear sign that the 50 moving average is going to be hold really well for Litecoin, well, where we basically rallied from the 50 moving average. I thought this was absolutely going to crash when this move occurred, but it found massive support down to 50. So from where we are at the moment all the way down to the 50, that is, it has to lose nearly half of its value. So there's a 50%, nearly 50% drop. So 40% drop, 45. So if you look at technical indicators, we can see that the RSI is at 77. It is overbought. We see that the stochastic is flat. The MACD is very bullish, but we are way outside of the Bollinger Band here, and a pullback should be expected at any point. So yes, we have a few resistant support levels. We have the 329. We have right here should be a massive support level if this basically breaks, which is 305, which is the previous highs here, and also the 26 moving average. Then we could drop all the way down to the 50, which is also at 237, and that's also where we found the previous highs here. So usually tops are major support levels. So pull back to here, drop further, and then should find major support around this area here. So usually you look at something similar to this. So you fall and you basically break the previous highs of the candle, and then it continues to the upside. So then we can also look at the Dash, which has also rallied significantly, and then it's now pulling back. So it went from support at the 50 moving average. We saw it here as well, and also here. 50 moving average both for Litecoin and Dash have been massive support for the last 3 drops. So here it fell towards roughly a little bit low to 230, and then rallied all the way up to 475. So also here we should expect support around this area here, which is give or take 400. We should expect the support down here at 340, but the 50 moving average all the way down here at 268 should be where this stops if historical support holds. So yes, rally, support, rallied, support, rallied, and then probably support when the 50 moving average moves in this direction. So of course it won't drop down to this level. The 50 moving average will travel this way most likely, and then we'll find support around this area where the 50 moving average will be. We are not overbought at this current stage. We're underneath 70. Stochastic is flat, and the MACD is becoming flat. So it's running out of momentum at this point. So it did get significantly outside of the Bollinger Band. We did have a crossing here of the, you can look at that, of the 9 moving average and the 26 moving average. And this is a really in the cloud. It is considered to be a buying signal, and of course you can see how this spiked to the upside. It does lag. For example, here we have a crossing to the downside, but that drop has already occurred over here. So it's not always that you get those perfect timing. This would be a really good timing. This over here would also be a really good timing to buy, as the 9 moving average is crossing the 26 moving average to the outside. So the same goes for over here. We have the crossing, and then you get this top. So at least the bullish run are apparently more accurate than the bearish runs, and that's probably better because when you have an uptrend, it's not a really good idea to short, especially not cryptocurrencies, which are rallying significantly and everybody's talking about it, and therefore it's basically rallying even more. So just check. No, they have not added here, so that will not be included. So then we can also look at Polkadot. I have not looked at Polkadot for basically ever. So this is a competitor to Cardano, and well, this has not seen the rally that most other cryptocurrencies have seen. We did fall all the way down to 26, and then reached 40, 43, and now we're falling down. And this is a typical pullback where you overreach up towards resistance, which is usually is the top of the Bollinger Band. We did not go above. We did go above here, and it completely collapsed underneath the bottom of the Bollinger Band. So if you look at where this has found support in the past, it has been the 26 moving average, it has been the 9 moving average, and it's also been the 50 moving average. So, and then we also see the bottom of the Bollinger Band, which we basically broke here. But therefore we should see quite a lot of support here at the 38. Then we have the $36, $35 range here, and then we have the bottom of the Bollinger Band, which is at the 29. Sorry. If you look at technical indicators, they are looking fairly bearish for this cryptocurrency. We can see that RSI is turning around, indicating bearish momentum. The same goes for stochastic. It has crossed the signal line here, indicating bearish momentum, and the MACD is basically flat, just above 0. So you can go into negative territory. We are also approaching the technical cloud, and usually when you're inside the cloud, it's not a good idea to basically trade this either to the upside or to the downside. So we can go and look at the indices. Yeah, we look at the futures, and futures at the current stage are fairly red, most of them, especially the ones that rallied significantly on Friday. So that was the Nasdaq 100 futures, and then we have the German DAX here, which also rallied significantly. We had the FTSE that rally, FTSE 100. Then we have the S&P 500, which is technically at 0.01 at this point, no movement there whatsoever. So we'll start by looking at the Nasdaq, and if you can see that we are down 0.41% at this current stage. So we found, let's just take it as overall. First of all, we are in an uptrend. We are above the cloud, for example. We're above the 50 moving average or above the 200 moving average. We have quite a lot of room to the upside until we get to the previous highs at 14,000, give or take. We are also far away from the top of the Bollinger Band, which is 14,151. So we have witnessed support down here at the 50 moving average. So that's where we found support on Thursday, and then Friday we rallied again. Main reason why we found support here is because we ran into the previous resistance over here. So this was an area where we tried to get through in the past. The same goes for here, and finally here we basically broke through that resistance. And usually when you fall back down, you fall back towards that resistance, and that worked perfectly here, nearly perfectly. And we have the 50 moving average there as well. So if this level breaks, then you could probably see this dropping all the way down towards the previous lows here, or the 200 moving average. So that is at 12,500, give or take. So it's still, we had tested it twice and it held on, this was basically this was on Tuesday, and then on Tuesday, and then also on Thursday it tested it again, and then we rallied on Friday. So to the upside, we broke the 9 moving average, and then we pulled back a little bit. So this was a fairly big rally from, give or take, 13,381 all the way up to 13,813, and then we pulled back. So we'll see whether or not this was mainly due to the jobs number. It was expected for the jobs number to be significantly better than it was, but it was absolutely horrible. It was around 700,000 jobs less than expected, and that was a massive shock to the market. So if you look at the technical indicators for the Nasdaq, then the RSI is bearish, so stochastic is bearish, and the MACD is also bearish at this point, and is heading towards negative territory. So we could see a retest of the 50 moving average if we don't have a turnaround. I think the weekly chart shows this even better, where we can see that we are in a kind of a downtrend, and we could be going towards the 9 moving average down here at 13,340 5, which is also the previous lows here from last week. It looks like that's where it's going to happen here. If that breaks, then we can go towards then we basically break support and we go towards the 26 at 13,000, and then we have the bottom here of give or take 12,444. So this is basically the weekly, and the weekly is looking fairly bearish. We can see also the MACD has crossed the weekly. Last time we did that was over here, and that's when we had this major drop towards the 26 moving average. So all technical indicators are bearish for the weekly chart in the Nasdaq. Just keep that in mind. So if you monthly, that is still a pullback. Some of them are also pulling back here, but here we could also drop all the way down to 12,500, which is the 9 moving average before finding major support. But let's look at the US. This is the Dow Jones, and the Dow Jones has been really bullish today, and we are trading at 34,792 at this current stage in the futures, and it is significantly overstretched. A pullback in the Dow Jones is expected at this point, or will start trending sideways. So for example, here we did rally and it was expected to pull back towards the support, but instead it basically started trending to the side before pulling towards support. So it can actually just go sideways for a while and not just pull back all of a sudden. If you look at technical indicators, we are significantly overbought in the RSI. Stochastic is flat at this point, and the MACD is very bullish. But we are significantly overstretched here as well in the Bollinger Band. Big difference between those moving averages. There's no sign of a selling signal, and we are in an uptrend. There's no question about that. There's not a lot of volume compared to what we have seen basically in the past. So here and here as well. So it is buying action. Most of this is technically buying action at this current stage. So let's look at the DAX. So DAX is kind of more interesting. There's been quite a lot of volume in the DAX of late, but a pullback is kind of expected. We had the 3 days where this rallied substantially to the upside after a fall towards support, which is the 50 moving average. And we can go way back and see that the 50 moving average has been an area or a moving average which has offered support in the past. You can see it here, we can see it here, we can see it also here where we technically crossed the 50 moving average, but still it's in the same area. And yes, and also here when we almost got down to the 50 moving average. But the last, or at least in 2021, 50 moving average has been where the DAX has rallied from. So a pullback was always expected as we got very close to the top of the Bollinger Band and also the previous highs here. So this is 15,470 or 15,500, give or take, is where it's a level where the DAX has to break through, and when it does, it will most likely go another 500 points to the upside to 16,000. If you look at technical indicators, we can see the RSI is bearish, the stochastic is becoming bearish, and the MACD is flat at this point. So a pullback could be expected. We'll find quite a lot of support down here at 15,187. And then we have the bottom of the Bollinger Band, which is give or take 15,000, and that's probably as far as the DAX will go. If the 50 breaks, and then we could see a major drop to the downside, as the DAX has been rallying all the way from 11,325. So we can look at the FTSE, and this was also expected to pull back today, as we fell last week towards 6,879, and then we had 3 days which were really good. So this was on Wednesday, on Thursday, and also on Friday, where this rallied from basically support, and today it is expected to pull back. So we may not fall that far. We'll probably fall towards the previous highs here, which is give or take 7,000. That is 7,000 will most likely be where buyers will come back in and push this to the upside. Compared to other indices, the FTSE has been lagging. It is far away from the previous highs before the pandemic, and this is 1 year after. If you look at the DAX, for example, or the Nasdaq, or all of them, they have all recovered, but the FTSE has not recovered yet. So it has most to gain from most of these indices, except for the China 50, which has been horrible recently. It has not been performing as well as it did in 2020. If you look at if the RSI, it is turning around as expected. It's becoming bearish. The same for the stochastic, and the MACD is basically flat at this point. So we could see this pull back towards 7,000. That's probably as far as this will go. And next target will be 7,200, 400, and beyond that. Sorry. Give me 1 sec. Yes, I'm back. So so this will probably fall towards the 7,000, then find support there. So we can go and look at the S&P 500, and you can see that also in the S&P 500 we should expect a pullback here, as we are significantly outside of the Bollinger Band, and yes, it is technically overstretched, and the pullback would most likely find a major support at, first of all, 4,200, and then towards 4,180. If you look at technical indicators, we can see that the RSI is turning around, indicating bearish momentum. So turning around. Same for the stochastic. It is also crossing the signal line, indicating bearish momentum. And the MACD is still bearish at this point. So pullback at this point is fairly plausible in my view, considering that we are significantly overbought and also overstretched. Long-term target here for the Nasdaq, and not Nasdaq, but S&P 100 will most likely be 4,500. So let's look at the China 50. So China 50, it did break all the way down towards the 16,584. So this is just becoming more bearish and bearish and bearish. So China's economy has not been the same after the pandemic, not even close. And 2021 for stock market and in China has not been really good either. So at this point we are in the RSI at 40, give or take, and that is fairly low. Stochastic is turning around, so we do have a pullback here at the bottom of the Bollinger Band, but we do most likely going to have a crossing, which is fairly important here, of the 9 moving average and the 26 moving average. And that will most likely cause this to go even lower. So we will mostly have the 200 moving average down here at 16,868. And if we have a crossing of these moving average of the 200 moving average, then that could be a very bearish signal. Then we'll also most likely have a crossing of the 50 moving average and the 200 moving average, indicating a golden crossing, which will make this go significantly lower. We are in a downtrend. We have been for quite a long time. We are way out underneath the cloud, and we are also having selling signals here of these moving averages. So, any questions? Well, they will have to increase interest rates at some point. They will announce it fairly soon, to be they were expected to pronounce it now in the summer. So the last time they did that, they I think it was way back in 2013, and they usually announce it like half a year before they do anything, because it has such a major impact on the market. And the reason why I think they will have to do something about the rates is because of due to inflation. So there will be inflation, because you can see all the commodities and precious metals that are out there at the moment are just skyrocketing every single day. And that will, because you use those things in production, then production will become more expensive, and in order to cover those costs you have to raise the price of the products, and therefore products will become more expensive, increasing inflation, and therefore it will hit the economy at some point. It hasn't done it right now, but it will do that at some point. We can go and look at commodities. Yes, we have metals here. So we have gold, for example. Gold is rallying, and I don't think gold is going to rally significantly further than where we are at this point. The main reason is we have the 200 moving average right here, and we are getting to the edge of being overbought, and I think we are going to see a pullback when we get close to the 200 moving average. So I do think that we are going to cross the 200 moving average, but if you look where we have found support in the past, it has been the green line here, which is the 9 moving average, and it has been actually really good run to the upside in gold. But also the middle of the Bollinger Band, which is right here, it has pulled back towards those points and then rallied from those points. So this is also where we find the 61.8 Fibonacci retracement is right here at the 200 moving average, and that could be indication that we'll rally up to this point and then pull back towards middle and then continue to the upside. So that is why I've not entered the gold market at this point, is because I'm waiting for the pullback, which will most likely be the previous highs here, which is around 1800. So give or take, pull back towards 1800, find support there, stabilize, and then go even higher. So next target will most likely be 1850 and 1900 and 1950, and then beyond that. It is clearly changing direction, and it is becoming uptrend due to the fact that we have crossed the cloud here. We are trending above the cloud, and now we're going in that direction. So last time we were above the cloud was right here, where we rallied from underneath the 200 moving average above the cloud and into the top of the Bollinger Band, and then we just completely collapsed. But it looks like after this a double bottom here, that trend has basically changed. So we can look at what else do we have here? We have energy. We can look at this is yes, this is WTI. So yes, futures, Brent, natural gas. We can look at natural gas first. So natural gas, this has been probably the market that has been most surprising. So first of all, we have to go all the way back here. We did rally all the way up towards the 3.2 or 3.3, and then we dropped, creating a double bottom here underneath the 200 moving average. And this kind of should have been a warning. Didn't get this, but this double bottom here should be probably a warning that we found major support. This was right at the bottom of the Bollinger Band and roughly at the 2.4 to 8, and then we absolutely rallied the last basically in April. It was a massive rally. So usually prices drop in this period of time of year, but we have seen quite a nice rally up towards the $3 range, and we are finding quite a lot of problems here. So if you look at technical indicators, we can see that the MACD is nearly crossing the signal line. We have the stochastic cross the signal line, and the RSI is also pointing to lower levels. But it has been trading sideways, and it has not collapsed towards the middle of the Bollinger Band, which is right here, which is roughly at the 2.85, but we're trading at 2.947. So if this holds, then we could see another run at the $3. If we break above that, then we could go to the top of the Bollinger Band, roughly at 3.1. And yes, I would. I'm just looking at this market. I usually don't trade this market if we are not at massive support or massive resistance. So I did trade it here, for example, when we got really close to the. No, it was not right there. I did trade it here. And I did also trade it here when we were at the very bottom of the 200 moving average. This was fairly obvious that we were going to see a rally here, and that was actually a really nice rally. So there was also another warning that we were going to rally in natural gas, and that was right here. So we have a crossing of the 9 moving average and the 26 moving average right at this point, which is at 2.566, and we did have crossings of the MACD, the stochastic, and also the RSI started to trend significantly to the upside. So this was yes, if people entered here, did a really good trade. Yes, any other questions? I can look at Pallium. So we have Pallium here, which is right there. Yes, we have Pallium right there. Yes, so I remember when I did the videos for this market, I started off over here. This was basically around August, September last year, and nothing happened in this market. It had a high of 2.5, it had a low of 2.1, and it was just going back and forwards in this range. So I technically never trade in those ranges, but as soon as it broke out of that range, it was right here. We also have a crossing of the 9 moving average and the 26 moving average right at this point, where it just absolutely exploded to the upside. And you can see the distance between these moving averages at this point. There's no signal at the moment that this is going to break to the downside. Even though we had a massive drop last week, on last Friday, it still rallied and ended above the 9 moving average. At the moment, we are testing the previous highs here. If they break, then we are going to the top of the range here, which is 3,070 or 70, give or take, and beyond that. So it depends on whether or not we basically break these highs. We are on the edge of basically being overbought, but we have been there for a really long time. All the way here, we were up at 73 before we basically broke down, and up here we were up at nearly 75 before we broke down. That was actually that rally right there. So yes, this looks like it's going to continue. We have the 50 moving average here, 200 moving average, the cloud, and there's no indication that we are going to have a crossing of these moving average, and all other technical indicators except for the MACD are very bullish at this point. Yes, then we have, we can look at the wheat before. Wheat market. So wheat has also been a market that has rallied significantly from support down here at the 200 moving average, all the way down to 592, all the way up to 768. So it broke down towards and found support at the 9 moving average. So that has been holding really well, so significantly well at least. So we pull back today, but still we're trading above the 9 moving average. We need to basically break the 9 moving average in order to go to the middle of the Bollinger Band, which is roughly at 700. Just give or take right here. Then we have the 26 moving average down at 680, but this doesn't look like it's on a market that is going to crash at this point. Even though we have these massive pullbacks here, it still continues rallying. So Technical indicators, they are, the RSI is bearish at this point, stochastic is bearish, and the MACD is still bullish at this current stage. Yes, so I think that I'm going to stop here, and hopefully this was helpful for most of the participants. And yes, I'll try to make a pre-market analysis as often as they technically can. So good luck and thank you very much.